Okay, guys, we're live. We can start.
Okay, guys, perfect. We're live. We're very excited to be here. This is our very first LinkedIn Live. Hopefully everything goes smoothly and we're going to have a very productive webinar. My name is Alina. I work as project manager at Datamint. I'm a huge fan of Web3, DeFi ecosystem, always trying to learn about new protocols, new trends in blockchain technology and crypto world in general. Today, we're joined by Ivan Vakhmyanin, co-founder of Datamint, and Michael Wagner, CEO of Brokkr Finance. And we are going to talk about liquidity provision in Uniswap v3. Thank you to everyone who joined us today. Hopefully you leave this webinar with some new insights, some interesting knowledge that you learned today. Hopefully it's very, very productive for you. It's going to be productive for us for sure. A little bit about our agenda for today. We'll start with a quick introduction. We'll talk about what Brokkr Finance does, what Datamint does, its services, its products, and how it's related to Uniswap. Then Ivan briefly will talk a little bit about evolution of Uniswap and main features of Uniswap v3. It's going to be very important for those who are not very familiar with Uniswap, so don't miss this part. The main part of our webinar is going to be dedicated to challenges of liquidity provision for different types of investors. That's why we have 2 points of view. We have Brokkr Finance. Michael is going to talk about retail investors, their pains, their challenges, what to do, what not to do. And Datamint will focus on institutional investors, the same things, challenges, opportunities, risks, how to minimize risks, how to stay profitable in the space. Should be very interesting. Should talk a little bit about possible strategies that can be deployed in Uniswap v3. We want to dedicate the last part of our webinar to future developments. We'll focus a little bit on Uniswap v4. Brokkr Finance has done some work for Uniswap. They'll share what they've done. And we'll discuss potential opportunities for Brokkr and Datamint in the future. And we want everyone to engage with us. So we want to spend 10-15 minutes at the end of our webinar for Q&A session. So if you have any questions, any comments, please leave them in the chat and we're going to address them. As many questions as we can. So let's start. Let's dive in. Let's not waste any time. Michael, please tell us about your experience and about Brokkr Finance.
Sure. Thank you for the intro. I'm Michael. I lead Brokkr, which is permissionless asset and liquidity manager. In reality, that means that we build various financial instruments on top of DeFi. This includes crypto indexes, yield and liquidity management strategies. And that's basically what we do and what we offer. And that's the reason why we are here.
Fantastic. Thank you so much. Ivan, can you tell us a little bit about your experience and what Datamint does?
Yes, sure. So my primary experience is in the realm of enterprise and big data analysis. So a couple of years ago, we, with my team, decided to start Datamint because we've seen that although in traditional finance you have a lot of data tools, like you have Bloomberg, you have Refinitiv, but in crypto you actually have very difficult access to data, and if you don't have like good data, you can't trade properly, you can't create financial products properly. So that's a big pain point. So we started as a on-chain data analysis, research and data provision company, but then we slowly evolved to the actually strategy development company. So now we are not only providing data, but we also develop investment strategies for our clients that are mostly hedge funds.
Thank you so much. As I mentioned before, we're focusing on Uniswap today. It's the largest decentralized exchange in the DeFi ecosystem. Ivan, can you tell us a little bit about what Uniswap is, its evolution, and what are the main features of Uniswap v3 specifically?
Yeah, sure. So I will start from the beginning because I see that we have quite a diverse audience today. So I can't assume that all of them are like DeFi specialists. So let me share my screen 1 second. Okay. So Uniswap is a decentralized automated market maker. That may sound not very like clear, but I will start with analogy to the traditional market maker. So the concept of the traditional market maker is simple, although it's not as that simple in execution right now, but the concept is simple. So if you are a market maker, you are the actor on the market that provides liquidity to traders. And by taking these risks, because you need to hold inventory, like, for example, some shares of some company, and you have the risk of some very informed traders taking your liquidity from you, which is called adverse selection risks. But for these risks, you actually take the premium, which is called a spread. So you sell shares a little bit higher than you buy them, and on this spread, which is usually is very tight, especially if there is a highly liquid market, you get your premium as a market maker. So in traditional finance, market maker is usually a fund or a company that actually provides these services to the market and earns this money. In crypto and in blockchain, we have different concepts, and we have a concept of decentralization where you can replace some actors with some smart contract, and this is exactly the idea behind the automated market maker. So automated market maker is technically just a computer program which runs on the blockchain. It can run on Ethereum, on Arbitrum, on Solana, doesn't matter. And it takes the role of automated market maker. You have two type of actors. You have liquidity providers who just allocate money to this computer program, and you have traders who trade with this computer program. And the idea of how it works in case of Uniswap. So Uniswap is one of the most prominent and actually like incumbents in this space, though it's not the only automated market maker, but it's one of the most popular AMMs on the blockchain, especially in the realm of Ethereum like blockchains, which is called EVM blockchains. So the idea that the core idea of Uniswap is that the price in the pool follows a so-called constant product rule. So it says that the product of your reserves, like Ethereum and USDC, for example, is always a constant. So whenever trader takes, for example, Ethereum liquidity, the price of Ethereum goes higher, and vice versa. If the trader sells Ethereum to the pool, the price goes lower. So that's the idea, and this is the core idea behind Uniswap v2, where you have this function that governs the price in the pool. So, but you can see that the problem here, that if the price fluctuates in some small range, then actually only the small fraction of the capital allocated to the pool is used. And it's actually very, very important for the liquidity provider to have maximum utilization of his capital, because the more liquidity he provides to actual swaps, the more fees he gets from the traders, because from each swap, some percentage of the trade goes to the liquidity providers, and it gets distributed between them proportionally according to their share in provided liquidity. This is where the concept of Uniswap v3 comes, and the core concept behind you as a liquidity provider, for example, you can choose a range where you provide liquidity. So, for example, you provide liquidity for the range of for Ethereum for a range of like $3,000 to $3,020 per ETH, and the more narrow range you choose, the more effectively your capital is used, but you are exposed to the bigger inventory risks, because when if you are in the range like 3,000 to 3,020 and the price goes down lower than 3,000, then your position actually goes completely to Ethereum, and so it's exposed to the loss if the price goes down, and vice versa. If the position goes up, then from the price range, then you're fully in USDC in case of the ETH USDC pool, and you stop getting profits from the price of Ethereum. But if the price goes back, your losses are actually reverted, and that's why this concept is frequently called impermanent loss. And on this chart on the screen, you actually see the historical liquidity concentration in ETH USDC pool for about a year. So you can see that most of the liquidity providers, and the lighter the pixel is, the more liquidity you have in this pixel. The x-axis is time, the y-axis is price. So you can see that with the introduction of Uniswap v3, many liquidity providers started to concentrate liquidity around the current price. And you see that as this graph becomes lighter and lighter to the right, so which means that more and more liquidity comes into Uniswap. So that's the core concept, and it was quite successful actually, because at the moment we have some recent statistics here. The liquidity which is locked in Uniswap is already higher than any liquidity than the liquidity locked in most centralized exchanges. Although most trade volume, of course, happens on the centralized exchange for main assets like BTC, ETH, and top altcoins, of course. But the liquidity is actually very high, which means that if you want to like swap $1 million to ETH in one transaction, then it's probably and in many cases it might be more you will get better price swapping on Uniswap. And to answer the question, to add to the question of why you want to invest your assets into liquidity on Uniswap, other than that it's completely permissionless and you can do it in any size, like from $1 to $10 million without any permission. So, but another reason is profitability. And we have also some recent statistics here, which we like fetched from the blockchain using our on-chain engine. And we have some top performance in the last 3 months on most liquid Ethereum pools. So you can see that APIs can actually go as high as like 100% or 200%. Though this is, I have to warn you that this is not easy to achieve these numbers, and we will talk a lot about this more. And I also need to warn you that many like LP analytics tools, including the one which is published on the Uniswap website, might be misleading in some cases, but we also will talk about this more. And you can also just to finalize my overview of Uniswap liquidity provision, I also can share these statistics, which is this is the aggregated profitability for most liquid Arbitrum Uniswap V3 pools. Arbitrum is one of the most popular layer 2 blockchain secured by Ethereum, and I think it was like #1, but it might be recently overtaken by Base in terms of trade volume. But anyway, you can see that on aggregated P&L for the top pools is like $33 million, 22, 17, 17. And for example, this is the example of pool which was unprofitable on aggregate. And it's also interesting that you can see that this profitability differs from the amount of fees that are accrued by the liquidity providers. The reason for this is that the profit of the liquidity providers, it consists of two parts. So one is accrued fees from the trader swaps, which only increase monotonously while your position is in range. And second is the appreciation or depreciation of value of the assets locked. So for example, if you have USD to Bitcoin to Ethereum pool, like here, if the price goes down, then you might be in a loss, even though you have accrued a good number of fees. But we will speak about this later. This is one of the challenges of liquidity provisions, and I think this is the time to step to this very interesting and complicated topic.
Thank you so much, Ivan. Hopefully our participants learned some information about Uniswap and specifically Uniswap v3. And we are going to our main part, challenges of liquidity provision in Uniswap v3. And we'll start to talk about first type of investors, retail investors. And here we want to listen to Michael.
Yeah, thank you for the kind words, and I will take it over. I hope everything is visible right now. Yeah, awesome. Yeah, I really liked what Ivan mentioned, and I will also touch some of the points he made, and I think it will be cool. So let's start. I will talk about the issues the retail investors have usually, or when I talk to them, and I will kind of mention, like, go through the main pain points. So what are the main challenges and how to ideally overcome them? What I hear the most, or at least the most frequently, is that generally concentrated liquidity pools, like V3 pools, are super hard to understand because they are complex. Users have to manage it manually, which is another pain point because you have to manage it and be on top of the position basically 24/7 to not experience larger losses. It's also hard to manage or track the performance and then also manage the positions. And they are also not using any benchmark, so they are not even sure if they are profitable or not. And there are also like a few questions that arise the most frequently when we talk about the complexity of the consolidated liquidity pools. And then it goes to, okay, I need some custom price ranges. How should I set them up? And I need to rebalance them. Why? Because they are used to like the V2 pools, which are basically infinite range. So it goes, so you deposit liquidity into 0 to infinity, and you deposit and you don't have to do anything. And the majority of the LPs that I meet with and I talk to, they are still used to this concept. And setting up price ranges, you know, what's the best use case, or like not use case, but what's the best practice? Should it be 5%? Should it be 10%? Should it be 100%? Or should it go really to the infinite? What's the best for me? Then it's about the ratio between the tokens, because again, in the V2 pools, you deposit 50-50 and you stay 50-50 no matter what the price does. So if the price of Ethereum increases, you're still 50-50. But here, as Ivan mentioned, the ratio changes with the price. So if price increases, you're more in USDC. And then again, then you should rebalance if you deposited 50-50. And then the question is, okay, impermanent loss. I knew that something like that was in V2 pools as well, but I thought that concentrated liquid pools should be more efficient and there shouldn't be that much impermanent loss. But actually the opposite is true, that there's a lot of impermanent loss that eats a lot of profit, especially if you manage it manually and you are kind of slow on rebalancing. Because every time the users rebalance, they basically make the impermanent loss permanent. So those are, I would say, like the most frequent things with the concentrated liquidated pools can make it difficult for the users. Then if you go to the manual position management, again, like what's the ideal range? When should I rebalance? And when they start rebalancing, then it's a question, should I wait until I get to the edge of the range? Should I rebalance after it gets out of the range and hope that it gets back? And again, what's the best way to do that? If you wait too long and the price doesn't get back to the range and you rebalance only after, you're just bleeding money. So then you oftentimes need to do it differently. And ideally need to automate it or use some tools to do that for you. The other thing is that it's hard to track the performance because this is an UI from Uniswap. And basically the only thing you see is like the current value of your position and how much fees you generated from that position. So it doesn't really tell you that much how well you did or what's the APR or anything. And for you as a user, this is not sufficient. You don't know if you're making money. You don't know if you are profitable at nothing at all. So you need to track it manually or use, again, like third-party tools. And then again, is it better to LP or is it better to just hold the tokens? And that's kind of where we get to the not using any benchmarks. Because if you can't beat HODL, which is basically holding the tokens 50-50, why should you LP in the first place if you can't beat HODL? Because oftentimes what we also see is that, let's say, the users might even use another automated liquidity manager, or they might see, okay, I made 15%, and they're like, oh, LPing is amazing. But they don't see that if they were just holding the tokens, they could make 30%. So that's the difference that I'm seeing with the LPs. And oftentimes this is also the opposite when it goes the other way around, when they are like, hey, I'm down 20%, but I could have been at zero or like holding the value if I just held the tokens. And that's why LPing is difficult, because it's not that transparent and there are a lot of moving parts and many ways how it could go wrong. And just like how we do it and how we are doing it differently. We have basically like 3 rules in a way that can spin around, that we are really focusing on the liquidity providers and we want to make them more profitable. So we just really focus on the performance and we backtest all of our strategies. And what we have also seen is that our backtested strategies actually perform better in live results than they did in backtesting, which is good to have. But here we see, for example, like a backtest chart on ETH GMX, basically on the longest possible time frame, which is around like 2.5 years, because V3, Uniswap V3 launched in 2021, so there's limited amount of data. But this is what we see. This is what you see, and here you already see the difference between like what you see in a lot of Cs, what you have in Uniswap interface and what you can get also through Brokkr, because everything is transparent. And that's the other thing, like the benchmarking, performance, and the transparency is what we saw that was missing. So every time you see, okay, there is a hodl, there is this versus hodl, and the metric tells you, okay, how well are you doing compared to just holding the tokens. And then it's about transparency that, sometimes the strategies also don't perform as we could have hoped, or you're also exposed, to the price. And as Ivan said, there are two parts. One is APR, and the other one is the price of the asset. And so, for example, many of our strategies are focused on the price appreciation and generally playing with the price rather than just the APR, because it's hard to beat rebalancing fees, arbitrageurs, and other factors that influence the profitability of the LPs with just APR. High APR usually doesn't beat that, and you need to include the other factor, which is the price, to the strategies. And maybe also a few other tips at the end. If you want to do it manually, because it's still legit and it can work very well if you know what you are doing. First thing is high APR doesn't equal profitability. We built multiple strategies just to test them that had over 300% APR, but were minus 80% on the net results. And that's proving my point that just focusing on the APR is not usually the best thing to do unless you LP for shorter time periods. The other is it's oftentimes better to rebalance before you get out of the range, unless you expect the price to get back to the range. Because there are also many LPs that can't play with that they have certain set of expectations, and they expect that, okay, the price will go sideways for the time being, or for a month maybe, and they expect that this is going to happen, and if there are some ups and downs over this range, it's fine. But this is heavily dependent on your expectations and you being right. If you're not right, then you will be bleeding a lot of money, because then you'll be rebalancing later than you would like. The other thing is that oftentimes it's better to provide liquidity on cheaper chains like Arbitrum and basically any other L2, which could be Blast, could be Base. There are so many of them that there are a few reasons. One is that they are oftentimes running certain incentives. So you might get, let's say, 100% APR, but then there will be additional 50% APR. So even if the strategy is not profitable, you might be profitable because of the additional incentives. The other thing that is generally cheaper and rebalancing doesn't cost that much. And it's usually better than the mainnet Ethereum because their majority of the volume there are arbitrageurs, and they are extracting profit from the LPs, and it's a little bit harder on L2s than mainnet. The other thing is it's good to provide liquidity single-sided, or not 50-50, but playing with the price appreciation of the assets as well. So you are not dependent just on the APR, but you can also capitalize on the asset price movement, which also reduces the impermanent loss. And if you are also LPing manually, it's good to use additional tools. One is Revert, where you can do auto compounding and generate position management. Another one is Merkle, where you can search for pools that have incentives. So again, you can get higher APR than with, let's say, on mainnet. This is how, for example, Revert looks like, which like regular RPs can easily use. And you see some of the metrics, some VAPR and total APR, PNL, and basically what you are missing on Uniswap interface, you can get directly in Revert. And this is how Merkle looks like, where you can get the Merkle rewards. You can provide liquidity. You can select which pools you like, where you want to provide, etc. And that's usually kind of like how you can approach it if you want to increase your APR. And I think that's it from my side, at least like from the retailers issues. Yes.
Fantastic, Michael. Thank you so much. One more question before we move to Ivan. What do you think makes your particular services stand out from your competitors, for example?
Yeah, that's something I haven't mentioned. That's true. I would say the main difference is transparency and generally the performance, because no other liquidity manager also shows you really like the performance and compared to HODL, or like, you know, showing you all the metrics, showing you the past performance. Usually you just see, okay, you are getting high APR and what's the TVL, and that's essentially it. You don't see the past performance, you don't see how it actually performs. Is it better than HODL? And that's also the reason why we actually started building Brokkr, because these strategies weren't really profitable, because many of these ALMs are not really profitable in the long run, at least compared to HODL. And we want to build something that's better.
Thank you. Thank you. Okay, we're going to move to Ivan. He's going to focus on institutional investors. And if you think about that, just a few years ago, there weren't so many of them in the space because DeFi was new. But with 2024, with a lot of different developments, we see a lot of interest from institutional investors. So Ivan is going to cover this topic.
Yeah, sure. So, well, first of all, this liquidity provision in AMMs and in Uniswap is really gaining traction among institutional investors, because it's the good thing for them is that by doing liquidity provision, you can actually bet on the trading volumes and on the growth of the ecosystem. So it's not just like speculations on the some meme coins prices. That's a bet on the solid development on the infrastructure, provided that you provide liquidity to some good crypto assets like Ethereum, BTC, and I can say that most of institutional investors are focused on the, like, we call it blue chip pools, like Ethereum to Bitcoin, Bitcoin to USDT, Bitcoin to USDC, and some similar pools. But yes, institutional investor also has challenges, of course, and they are in some way similar to what retail investors have, but they also have some specific challenges. For example, one of the challenges is regulations and security, which is very different for the institutional investors. First, in terms of regulations, some depending on the jurisdictions, there is a question. So if it's possible to build the legal structure, proper legal structure to invest in the liquidity provision on Uniswap, because Uniswap is a decentralized protocol, so nobody is responsible for this protocol, and essentially use the liquidity provided by investors. So that might be a question, but I can say that that's a long story by itself. But essentially, it's already possible in multiple jurisdictions, and it can be run, and I can show how we with our partners solve this problem. And I would say that the list of approved jurisdiction is growing, and hopefully that will continue this way. So another issue is security. So it's very important to be highly secure about the funds, and it's not only about how you actually build the solution, but it's also how do you certify the solution? Because, for example, as an institutional investor, you need to insure your funds that are provided to the smart contract, for example. And the premium for this insurance will highly depend on the quality of the solution. You need to consider using custodians, using specific security tools, etc. So this is one thing. Second thing is like technical execution. So just as Michael said, if you want to have a high quality strategy, so you cannot do it manually. It's not like some fund manager working like Monday to Friday, like 8 hours a day can manage. So crypto is not sleeping, markets are not closed, are never closed. So if some sudden drop in price occurs like in 3 a.m. Saturday morning, you have to react. And this is done automatically, and it also needs to be implemented, which is much more technically complex than, for example, implementing trading strategy, automated trading strategy on centralized exchanges. Because on centralized exchange, you just have a certified API, which you can use to send orders and fetch information. On blockchains, you have to send transactions and you have to account for many things like gas costs, MEV, congestion of the network, etc. So many things you have to have in mind. And the third part is quantitative, which I mean, by that I mean the complexity of creating not only the earning strategy, but the strategy that earns money in a risk transparent way. So we need to understand what and quantify the risk associated with this specific strategy. And these risks need to be like specified, approved, etc. So let's speak about how we tackle these challenges. So for the security issue, we have actually two options how we can implement the liquidity provision for institutional investors. And one is the ETI-based, regulated ETI-based structure, which is built together with our partners company GrantFin. This is the US-based fintech company, and they actually build the ETI structure that allows institutional investors to use central traditional exchange to actually buy exchange traded product, which represents the strategy of liquidity provision in Uniswap. So then it goes through the regulated fund structure, and then it goes to the actual blockchain, to the automated trading vault, which is managed by the strategies we develop. And if we look more deeply in this automated trading strategy, then we can see that it is also built with the security in mind. Because the problem of blockchain, one of the problem is that, as you all, I think you all heard many times, not your keys, not your crypto. So once, if you have some private key loaded in some server that runs the trading strategy, if some hacker gets in and steals this private key, then there is no way you can recover the funds. So, of course, this is not an option for the institutional investors. And that's why, to solve this challenge, we have created the so-called trading vaults. These are audited smart contracts that can be deployed by the investor himself or by the custodian on the behalf of investor. Or he can use like cold wallets or any MPC, so any security tool that he wants to deploy this vault. And after that, he assigns the rights to manage the position to the specific wallet which is used by the trading bot. And this specific wallet does not have the rights to withdraw funds, to trade the funds for some arbitrary token. So it can do only the specific whitelisted operations like rebalancing position, closing position, opening position, only in whitelisted pools. So so this completely solves the position. So even if the server with the system gets hacked, then the worst the hacker can do is like badly manage position for a couple of minutes before it gets blocked. So this is the solution for the security challenge. And also for technical challenge, if we do this on the base on our two products. One is DeFi Datamint DeFi data warehouse, which is the real-time data warehouse that fetches all the data from blockchain, transform it, cleans, and you get all the liquidity events, all the prices, everything. So MEV activity, so everything you can use that can be used by the strategy. And second, we have a Datamint DeFi engine, which actually executes strategies in a very reliable way. So it has like multiple RPCs, it has custom gas profiler, it has multiple watchdog systems that make sure that if something breaks, it gets repaired automatically. So this is like bulletproof system. And it's also has reporting capabilities. So it's there, as Michael said, it's very important to have proper reporting. So we create a personalized performance dashboard for investors with benchmark, with everything, and also implement the real-time reporting system. So this is very important. But in the end, the most important thing is, of course, the proper strategy. And as also Michael said, the biggest challenge, one of the biggest challenges in liquidity provision is so-called impairment loss, or like inventory risk, how it's called in the traditional finance. So the reason for this risk is that the AMM, being like a computer program, so it doesn't know anything about the like macro events, and in case something happens and price goes to either direction quickly, the AMM can be exploited. So it always buys the underperforming asset in this case. And this is the reason why the payoff curve or the like value curve of the Uniswap position is always below the HODL value curve before we add fees. So the green line here is the HODL position value. So the bigger the price, the bigger is the value of our position. And the blue line is the value of the concentrated liquidity position. So you can see that it touches the green line here, and you have the in-range impairment loss and out-of-range impairment loss. So this can be hedged, of course. So for example, if we implement short position to hedge the LP position, or if we use borrowing, over collateralized on-chain borrowing, which is mathematically similar to short position, we can actually transform this curve to the orange one. But you can see that it is close to delta neutral position only in some like short range around the current price. If the further we go out, the more the bigger loss we have. And this is one of the mathematical reasons behind the recommendation of Michael to rebalance before you go out of range, actually. So you can perfectly hedge the LP position, but it's not that easy, and it can cost you more than you receive as a premium from fees. So, for example, you can construct the portfolio of options, like call options, put options, but that will for sure cost you like a lot of money, and it's very hard to properly build this portfolio. But anyway, even the question is, can you stay profitable if you don't use hedging at all? And to answer this question, we have built a specific tool, and we made a research based on this. And this is one of the examples of the Datamint's approach to the actual strategy development. So the main difference between the main special thing behind the Datamint approach is that it is mostly empirical. So it's not like theoretical. When you take the model, you do some backtesting, you tweak some parameters like you usually do. In Datamint, we are leveraging the feature of blockchain that you have all the history, all the trades, everything recorded on the public ledger, and you can actually analyze it, and you can play not the backtest, you can play the simulations, like historical simulations and real-time simulations of your strategies. So this is the example when we take all the data from Uniswap, from Ethereum, Arbitrum, and other systems and other blockchains, and we can see what's happening on the blockchain, not only on the aggregated layer level, like you see on DeFi Llama, for example, but you can see it on the level of each individual player. I think I would better show it live in the tool briefly. 1 second. Yep, here it is. So we have a Arbitrum stats right here. So we have top pools, we have top players by API. We have filtered the players that liquidity providers that have a P&L higher than 20K, so to not to filter out the small players, and we filter them by the position quantity. So we see only those that have more than 10 positions historically. And here we have the overview. For example, this is the profitability of pools that I was showing in the beginning. But it's interesting how you can see what individual liquidity providers do, and you can actually infer some valuable insights from it. So, for example, I just selected a random liquidity provider that has the capital of around 170K, and he has not bad API of 15, but he can do more. We can see that he operates in 4 pools, and he loses money in 4 of them, but he actually earns a lot in Ethereum to USDT with 500, which is a fee tier. And you can see that its profit goes almost fully from fees. So which means he's not like earning on some speculation of prices, but he earns from fees. And we can jump to more detailed analytics. So we can take this pool and see his positions. So when he opens them, closes, so how the range he uses in percentage, and we can see how it works. So which positions were profitable, which were unprofitable. And we can go even further by actually seeing the historical P&L of the specific liquidity provider. So which is quite good for this one compared to the price curve. So this is, and based on this empirical data, combining it with quantitative financial engineering, we actually can build the strategies for the institutional investors. And to give you a few tips on how it's better to do liquidity provision. So based on the research we have on Arbitrum, for example, we can see that the profitability of pools differs massively. And we can see that the most, for example, on Arbitrum, the most stable profitability is generated by the pool of Bitcoin to Ethereum. And the reason for this is that these assets are highly correlated, which means that the impermanent loss is nominated in, it increases when the price of Ethereum to Bitcoin changes. And usually, in most cases, it goes together, so it doesn't change much. It can change in nominated in US dollars, but you don't have this additional component of the impermanent loss. So you can see that it was profitable actually when on aggregate for all investors, when the USDC to Ethereum 500, for example, the most popular pool was unprofitable for all investors, meaning even winners and losers. So it's a good idea to see some correlated, to use some correlated pools to start if you are doing some manual position management. For example, you also have some very correlated pools like stable to stable, like USDC to USDT, or wrapped either wrapped Ethereum to wrapped staked Ethereum, but these are usually have very high competition and liquidity, so you get very small amount of fees. So this is the aggregated LP profits for all time, not like 3 months, but for all time. And you can see that the situation is a bit different, which means that the past is not a guarantee that it will happen in the future. So there is no guarantee that Bitcoin will not depeg from the Ethereum. So it's important to know this as well. And one more tip is connected to the question. So do you want to really actively manage your position, or you want to just leave it and forget? And we see that on aggregate, those liquidity providers that actively manage position, like those here we have filtered P&L for liquidity providers with 20 plus positions. On aggregate, they lose to the just wide hit and forget position, which doesn't mean that some specific liquidity providers who do active management are profitable. And we see that there is a small number of highly professional liquidity providers and liquidity managers who can do it well. But if you are doing this manually, then probably a good idea is to use like just moderately wide position that you do not expect that the price will trigger rebalances like every day or every week. So for leaders, as I said, for leaders that can be quite profitable. So that's still a very interesting place to be. And to wrap up the takeaways and recommendations, which are not a financial advice, of course. So one is, as I said, it's still hard to be profitable at LP provision using unhedged position. So you better know exactly what you are doing and be a professional in this space to earn here, or work with professionals, or use the professional tool or protocol to manage your liquidity. Second, for top LPs, it's possible to achieve 3-digit APIs, and I'm talking not about the just fee APIs, but I'm talking about the real API. Third is that in general, active concentrated LP position management is worse than just keeping a reasonably wide position. So if you don't know exactly what you are doing, don't try to over manage your positions. In general, highly correlated pairs are more profitable in the end of the day. And one more thing, which is more technical, but our research show that it doesn't really matter. It doesn't really matter. It doesn't really influence how frequently you want to manage your positions on which blockchain you started. So many people think that, okay, it's expensive to rebalance on Ethereum, so I can go to Arbitrum and I can rebalance every minute, very tight range, and follow the price. So this is not the case. The gas fees are not influencing the profitability here. So the core loss or profit you will have will be connected to the impairment loss in this case. So we don't recommend doing this like narrow following the price. But the gas fees can impact your profits depending on the size of your position. Because if you have like $10,000 positions, you will burn it very quickly by the gas fees on Ethereum. So you better do this on Arbitrum or any other L2 where you can stay profitable. If you have $5 million positions, then you don't have an issue with gas. You have other issues with slippage, with the fact that you cannot rebalance in one transaction and others, but that's the pain of institutional investors that we are working to solve. So, but I think that's all from my side. Once again, this is not a financial advice, so do your own research on this. We are just sharing our experience. And feel free to contact with us if you are interested in building on-chain data products or actively managed DeFi strategies.
Thank you so much, Ivan. A lot to digest, a lot of interesting information. We have a few minutes left, and we want to talk about future of DeFi sector and specifically the upcoming Uniswap V4 that's coming actually this year, probably Q4. But Michael will share his knowledge on this topic. Michael, please.
Thank you. Yeah, good to mention. Also, all tips and whatever we say, not a financial advice. Do your own research. Anyways, as Aina said, Uniswap V4 is kind of like the new version that's coming later this year from Uniswap. It's like the Uniswap V3 on steroids, essentially. It's supposed to launch in Q3. We'll see if that's gonna happen or if it will start on in Q4, but let's see. So just as a Uniswap V4 basically brings like three main products or features, and the first one is singleton contract. Singleton basically consolidates all pool contracts into one instead of each pool having its own contract. Doesn't sound that good, but this basically decreases gas costs because the tokens don't have to be transferred between multiple contracts because there is just one. So that's great. The other thing is flash accounting. And this again further decreases the gas costs because it enables chaining the transactions into one. So one can swap and deposit liquidity in one transaction instead of doing everything in separate transactions. So that's also nice. But the most important one, at least in our eyes, are hooks. You can imagine them as browser plugins, but for pools. They can completely change how the pool operates and completely customize the experience. This can range from like whitelisting addresses to creating like your own AMM. And we've received a grant from Uniswap Foundation last year to build a few of these hooks. I will talk about them a little bit later. But generally, what these hooks enable, there's like huge scale of opportunities. Basically, essentially everything is possible. You can create the AMM, order book AMM. You can create automated liquidity manager directly in the hook, so you don't need to use third-party platforms. You could do on-chain Bitcoin trading through Ethereum and through the Tor chain. You could have TWAPs, and there's just so many things that one could do that it's amazing, and it will probably unlock like completely new things that were impossible until now, and it will probably change the paradigm a little bit on the DEX side. So like what we built is, for example, liquidity locking incentives. So the users can lock liquidity and get rewarded for that, which is not currently possible on V3 DEXs unless they do some customized stuff. So for example, on Uniswap, this is not possible. You can't get rewards. That's why, for example, there's this miracle tool I mentioned in the previous part, where you can find the incentives on top of these pools through third parties. Now it will be possible through the hooks. Then there are dynamic fees based on volume, because many of the LPs are struggling, especially during high volatility periods, because that's when they rebalance the most often. And this way, they can get more of the fees during that period. Then there's this liquidity management, similar to what we are doing. You could have LP strategies integrated in the pool. So instead of using another third party or just doing the manual liquidity management, you could do it automated. You could have it automated this way. And you can then combine these hooks, which is probably the most interesting part, because if you can combine multiple of these hooks, you can create very interesting products that, again, are not possible or weren't possible until now. And it enables you to build on top of Uniswap, which is, again, like new. Sorry about the pop-up messages. And that's kind of like what's going to happen and what's coming. Also, this means that there is a question if the previous versions are needed, because you can build essentially everything on top of V4 pools. You can create a pool that will act as a V2 pool. So you will deposit liquidity into the full range. So into the infinite range from 0 to infinity. And you don't need the V2 pool anymore. And you get also the benefits of the singleton contract and flash accounting. Same as you can do V3 pools, because V4 uses the concentrated liquidity mechanism and just adds the hooks on top and the singleton and flash accounting. So again, we can expect that the liquidity will definitely move from V3 pools to V4. And we'll see like what's going to happen with V2 pools, if they'll be able to attract liquidity also from there, and if the singleton and flash accounting will be good enough for people to migrate. But also, from what I've heard from Uniswap, liquidity incentives will play probably a big role for attracting and migrating liquidity from V2 and V3 pools. And it's one of their large goals to really get the new pools open on V4 and get the liquidity there. So I think there will be many things that you can expect on that side. Also, Uniswap is not the only one who's running V4. PancakeSwap also announced that they will have a V4 version. If I'm mistaken, Balancer is also creating their own V4 in a way. And Algebra is also, they already have V4. It's called Algebra Integral. And they already have multiple DEXs using these new mechanics. So that's about V4 and what you can expect in the upcoming months.
All right. Thank you so much. The last thing that I wanted to cover with you today, what are future developments for Datamint and Brokkr Finance? Ivan?
Yeah, sure. So, of course, we will continue supporting more blockchains, of course, both in on data side and on strategies side, because the new blockchains usually offer like more inefficiencies and opportunities as well. So, for example, just recently we added Base blockchain because we see that it gets a lot of traction and it's quite interesting. So this is one thing. So second thing is expanding to more DEX types. So we already support all the Uniswap forks and all the forks of other DEXs, but still it's not like we support, of course, curve balancer, etc. But and algebra forks with liquidity book formula system, but still new DEXs arrive and this V4 stuff is also like around the corner. And so, of course, we will support it, maybe not from the day one, because we are like focusing on the empirical state. We need to wait while we get some data to analyze, but we will support it like very, very soon. So, and the third thing is building more complex strategies using derivatives, because derivatives in crypto are on the rise. And I'm not only talking about like simple perpetuals, but also about different types of options, and also not only centralized options traded on the centralized exchanges like Deribit or Binance, for example, but also on-chain option protocols, which are, they don't have much liquidity at the moment, but it's still growing, and I think it's crucial for the adoption of DeFi, because like traditional finance doesn't work without derivatives. So does DeFi. So this is very important, and this is our focus for the upcoming year.
Okay, fantastic. Michael, what are some of the future developments for Brokkr Finance?
Yeah, sure. From our side, it's always improving the strategies. We know that we are just scraping the bottom of what's possible. We know that we can build something that's much better than what we already have. So that's generally the improvement. We are working on hedge strategies that are kind of like delta neutral. So that's another type of strategies that we'll be running. We are adding support to algebra DEXs, so not focusing only on the Uniswap and their forks, but also to them, and expanding to other chains, because right now we are on Arbitrum, and we plan to expand to other L2s, Blast, Mantle, Base. We are likely also go to Ethereum mainnet. And then we will add support to V4 versions and build some hooks. So quite packed roadmap.
All right, thank you so much. I think we've covered everything that we wanted to cover, and it was very, very productive. So I don't see any questions. Whoever attended our webinar, you're more than welcome. Reach out to us personally. We're active on LinkedIn. You can reach out to Michael about Brokkr Finance, about the services, and you can reach out to me and Ivan if you have some questions regarding Datamint and Uniswap from institutional point of view. I think this is it. Thank you so much, guys. It was a pleasure, and hopefully we'll do that again in a few weeks.
Yeah, thank you, and good luck to all the crypto holders and traders.
Yes, bye.
LPs.
LPs for
And
sure.
LPs, of course.
Thank you, guys. Bye.
Thank you. Bye.